All right, welcome back. Um, in this tutorial, we're going to be talking about supply point of interest. Supply point of interest, how to identify the POIs in supply. Your POI is also known as your basing candles or your OB, that is order blocks. All right, so let's quickly dive to the tutorial. All right, now when you're talking about supply, you we have two types of supply. Okay, we have what we call rally base drop. Rally base drop. You remember when we say rally simply means price going up. Okay, then when we say drop, it simply means price is what is going down. All right, now look at this kind of example. Price simply just went up. Okay, price went up and it formed a series of small bodied candles, and there is a huge drop, a strong drop, drop that is actually identified with big candles dropped. Okay, now that is what you call what rally base drop. Rally base drop. All right, so let's see some examples. Okay, all right, now look at this. Price was actually on the upward movement. All right, price was on the upward movement up onto this particular place, and there is a huge drop to the downside. Okay, there's a huge drop to the to the to the down to the downside. What we are going to expect is basically that, okay, what is that small candle before the, sorry, that what is that small candle before the huge drop actually began? What is that small candle before? And that is this is the small candle. This this small bodied candle is actually your OB. It's a point of interest. Is actually what we call it's actually a point of interest is a OB, or you can call it your basing candle. Now, as you can see, price rallies up again. Look at this small bodied stuff. Now it rallied up again, but before it touched in the supply zone, there's another huge drop again to the downside. Just again, this is going to be, this doji candle before these big movements actually began again. That doji is going to be another point of what? Another point of interest. So as it is now, we have 2 points of interest on this, on this particular and in this particular example, in this particular scenario. So we have one over here which is actually tagged the supply zone. We have one over here, and of course before price could touched into that particular zone. Now some institutions found this particular area, this particular price range, they found it a little bit of of interest to them, and they sold off again from there, from that particular place, and they sold off really heavily from that particular place. So basically what we have to do is to mark out the candle, our basing candle, our order blocks, our POI. Okay, and we simply just what? We simply just mark out the place and look at what happened. The price simply just came into that, into that supply zone, and and plummeted again to the downside. All right. So we have two, in this scenario, we have two valid supply zones, supply POIs, or you know that we can actually trade off from. So all we have to do is to simply just what? Simply just mark out the whole B, and our whole B is actually our point of, as our point of interest. So we just mark out that whole B, and allow price to pull into that particular place. And of course, if you see what we need to see, which is actually what some of the things that we're going to be talking about later, talking about the entries, how to take, how to take entries, exactly the strategy, to take entries. We're going to be discussing that later. But okay, but for now, it's actually suffice to say that you know how to draw your whole B. You know how to draw your POIs. Okay. Now it's very important. It's really very important. So I'm going to say this. I'm going to run this again. Now, when you see big movement, when you see big candle movement in the market, know for sure that there are institutions behind that kind of movement. Now, your whole B is actually the last candle, the last small candle before the big movement began. Okay, so let's take another example. Now, this is another example of rally based drop. You can see that price was actually on the rise, though they are what small bodied candles, but we can't deny the fact that price generally was actually moving to the upside. Before this kind of movement happened, look at this huge drop. And what was the last candle? What was the last candle before that huge drop began? This is that last candle. You can take the doji here as the point of interest. Some people might also want to take this, but you can actually take the doji, because as far as we know, the doji is actually the indecision candle, where the buyers and sellers in the market have equal power, equal control before before these the sellers created this this supply, this supply in the market, and the price drops, right? Okay, so this doji is going to be our point of interest, is actually going to be our order block, or is going to be our basin candle. Depends on exactly what you want to call it. You're still saying the same thing. All right. So look at this now. Price simply just came into that zone, and price plummeted strongly again to the downside. It means that all we have to do is to mark out this base and allow price to come into that particular place. And if we see our entry model playing out in that particular place, what are we going to do? We're simply going to place our sell orders. When you have a supply area, you're looking forward to sell from a supply area, and when you have demand areas, you're looking forward to buy from demand areas. Okay, all right. So let's quickly move on. Now we have another example of a rally based drop. A rally base drop. Now, look at what happened here. Price was actually going, but you can see it's actually a number of a bunch of small bodied candles. You understand? A bunch of small, of small bodied candles. They are actually the thing making up the rally, right? So look at what happened at this particular place. And this small candle was actually the last one before this big move started. And like I told you, that anytime you see these big moves, it's actually the institutions behind that particular move. So look at what happened. Price simply just got to this particular point, and it plummeted hard. It's really very strong. Whatever reason behind that, whatever news, might not actually be our concern as a technical trader, but certainly you know that there is a fundamental news behind this particular move. There's a reason why institutions actually sold off from that particular space. So there is, all we have to do is to simply wait for price, to come back into that particular zone for these banks, for these institutions, for these hedge funds to liquidate the rest of their orders in that particular zone. Okay, so we simply just want to trade with them the second move. The first move is not our point. I mean, it's not it is not our concern. We're not trying to um second guess or to really guess the direction of the market. We allow the institutions to really tell us exactly what they are doing. Just because we know that they will certainly come back into their area of interest from the same area they actually sold off from to liquidate the rest of their orders. And when they come back to liquidate the rest of their orders, that is exactly when we want to ride with them. So look at this. So there is a base and there is a drop, and of course there is a retracement back into that particular zone, and there is a huge drop once again. And of course, you know exactly how to draw your base. This last candle before the huge movement to the downside, that's actually your base, that's actually your hobby, that's actually your point of interest. Okay, all right. So we have another type of continuation pattern. Okay, we have another type of supply. When price begin to drop and it forms a base and drops again, forming a base, and it didn't really have all of the power to go back again into where the entire story started from. Formed a base and dropped even harder. Okay, in this case, you're going to have two supply zones. There is a zone here, and of course there is also a zone up here. But the first place we're going to be paying attention to is going to be the second zone, because the second zone is nearer to market price at the moment. The second zone is nearer to the market, so that is actually the first place we are going to be interested in. And of course, that doesn't mean that we're not going to be interested in the first, in the first order block. Yes, we are interested in the first order block. We're certainly going to mark that one out, but we're also going to mark out this other base as well. That's going to be the first, in our first place we are going to be looking forward to take orders from, if we see what we need to see as per our as per our entry model. Okay, all right, I think you understand that. All right, so we have another example of supply continuation pattern, which is actually drop based drop. Now you can simply just look at this. There is a drop, and there is some small bodied candles that make up for the base, and there is another huge drop from that particular place. So we have one area here, as a supply zone. That's our first supply zone. Now the second one is going to be this. It's going to be the week of this one, or this particular or this particular small candle before these big moves down, and that's going to form our supply zone. So we simply just wait for price to come into that second, into this supply zone that we marked here. We allow price to come back into that place, and to join the movement to the downside. Okay, now this is another example of supply continuation pattern. This is also drop base drop. It follows the same thing. It follows the same thing. Now, of course, this example is actually from Australian dollar versus US dollar. This is also a forex pair, a currency pair. All right, and you know just check out your MT4 or your MT5, and make sure that you are able to identify these zones. Okay, now that brings us to the end of this class. See you in the next.